my dear buddies. So today's topic is about should a youngster invest in the share market? Now, this video is very important, especially for today's day and age, because investing in the share market has become extremely easy. That is, all that you have to do is download an app on your cell phone and you can start investing in the share market. But without understanding how the business world works, should a youngster actually invest in the share market? That is what we are going to be discussing today. Now, when I say a youngster, someone has to be at least 18 years old to start investing in the share market because they need a PAN card. And 18 is the least age when you can get a PAN card for yourself. So when we say youngsters, we can think 18 to probably 23. Okay, because most of the time, this is the age group where they haven't been part of any serious businesses, or they probably just joined a job and understanding how the corporate world works. So before I give you an answer, that is it a good idea to invest in the share market or not? First, I have always believed that the basics have to be strong in every and any topic in life. Only then you can understand if you should go ahead and do that. Okay, so also I strongly believe that a person who is actually making a video about a topic needs to be qualified and should have enough experience about that topic to be talking to you all and giving any kind of a general advice. So many of you know that I have been in a serious job in a very responsible position for 13 years, and my overall corporate experience is well over 14 years, and I am with a public limited software company, and I head my company's global information technology client support. So I know how the corporate world works and I know what is responsibility. Plus, I have my own startup companies, and my startup companies are into a wide variety of technology, into automotive technology, into electric vehicles, into lithium batteries, into aviation, that is unmanned aerial vehicles, drones, and mobile phone applications, and a lot of things. I will give you more information about all my startups later on in other videos. Okay, so the basics, how do you understand basics of business? First, when we generally call anything a company, right? People say, I have a company, I've started a company. But understand, there are different levels. First, general businesses, the smallest level of a business is known as solo proprietorship. Now, solo proprietorship means, say, me, Vikas, wants to start a business. Now, business can be different kinds. I could be providing a service where I'm servicing motorcycles, okay? Or I'm cooking food, that is having a fast food center. Or a kirana shop. Now, kirana shop is known as a trader, okay? Trading means you buy from somewhere and sell it to someone, and you are making a margin in between. Margin is a small profit. It could be 5%, it could be 25%. 25% is of course a good profit. Okay, so when I want to do something like that, I would start a solo proprietorship business. Okay, so my business name would be something like Vikas Trading. You will not see anything like private limited or anything beside it, because it is not a company, it is a firm, solo proprietorship firm. So here I am responsible for everything, profits, losses, liability, everything in my firm. And the next level is limited liability partnership, LLP. Now, solo proprietorship is not registered with the Ministry of Corporate Affairs. Now, you will hear a lot of technical terms here, a lot of financial terms. I can make a dedicated video about all of this later on, every specific financial term, because every term is a long topic on its own. So, after solo proprietorship, you have LLP, Limited Liability Partnership. So, for example, now I, Vikas, have gained experience in trading rice and trading essential commodities, okay, food. Now, so in this business, I want to take it to the next level. I want to expand my kirana shop to 10 different places, and I want to have big stores. So what do? I need someone to partner with me to pump funding into my firm. So I get a partner or 2 or 4 partners. So at that point, I register a limited liability partnership firm. Now this is also not actually called a company, it is called a firm. Alright. So I and 3 other partners or 1 other partner. Okay. For LLP you need minimum 2 partners. What we do is we register the name of our firm. It could be anything from Vikas Trading. I could change it to Global Trading. Okay, Global Trading LLP, and I register it in Ministry of Corporate Affairs, and the name of my firm will be valid across India. And so at that point, for profits, for losses, for liability, it will not just be me who's liable, but my partners also, according to the percentage of their partnership in the LLP. Alright. Next is private limited. Now, private limited is actually called a company. Okay. Solo proprietorship, LLP are not companies, they are firms. So now I want to take my trading thing to next level. I want to make it a corporate. Okay. Private limiteds can be on a larger scale can be termed as corporate companies also. Okay. So what I would do at that stage is, all of these like solo proprietorship, LLP, private limited, they can be started on their own individually. It is not that you have to start a solo proprietorship and then upgrade to LLP and then upgrade to private limited. No. Today, if I have enough confidence, knowledge and money, I can go ahead and start a private limited. But in private limited, again, I need 2 people. And in private limited, they are not known as partners, but they are known as directors. Again, this is a very, very big topic. Okay. So I start a private limited company, and private limited company, the people who actually own the company are known as shareholders. Alright, they are not known as partners. So I, Vikas, when I'm starting a private limited company, I can choose 1 partner or I can choose number of partners. They would be known as shareholders. So out of 100 shares in the company, okay, I can keep 25% and I can distribute. Say for example, I have 4 more people investing in my company, then I can have the shares distributed among themselves. Okay. So it could be 10% for someone else, 50% for someone else, and the person holding the majority shareholding will have the power over management. That is, if he or she is part of the board. So again, this is very technical when it comes to financial terms. We'll talk about this later. So private limited is a company. Now I ran it. So for example, I formed a private limited. Okay. I have shareholders, I have directors, and my trading business of trading grains, rice, all of this has become really good pan-India. I'm doing very well and doing 20-50 crore revenue every single year. Now I want to go to absolute next level now. Okay. And for that, I need larger investments. So for example, I need 500 crores to be pumped into my company. So an individual generally will not have 500 crores with them, correct? So at this point, what can I do? I can go to a bank, okay, and take a loan. But even for a bank to pump in 500 crores into a company, it's not so easy unless you are a very, very reputed company. So what I can do is that if for say 5 years or 7 years or 10 years, it depends, okay, it depends on again the legality, okay. So after so many years, if my company has been doing well, if it has been profitable and if it has a proper business model, okay, then what I can do is I can go ahead and apply to become a public limited company. So public limited means, now for example, at this point my private limited is doing well and I have 4 shareholders including me, and all these 4 shareholders will be known as promoters. Now why? Because they were with the company from the start and they actually promoted the company, okay, they'll be known as promoters, and the shareholding that we 4 people have is known as promoter holding, okay. So it means we actually did not buy that share from someone, we got it because we started the company and invested into the company and we got the company to this level. So 4 of us together have 100% promoter shareholding. So at this point we want funding, so we apply to become a public limited company and we need a like Bombay Stock Exchange, we need a stock exchange, okay. And most of the time companies, first time when they become public limited, they get their exchange as Bombay Stock Exchange, because the National Stock Exchange, they are much bigger companies, okay. So in India there are 2 stock exchanges, Bombay Stock Exchange and National Stock Exchange, known as BSE and NSE. So at this stage, 4 of my company's promoters, what we decide is that okay, we together have 100% shareholding, but we want to give 20% shareholding to the public, and in return we will want the public to invest in our company. All right, so we will say, I mean, there is a serious level of technicality here, okay. Whole analysis, valuation of our company would be done, and then there is a value of the company created, and then every share will be given a price, okay. And for example, for my company, every share, single share, 1 unit, if the price of that has been valuated as 100 rupees, okay, and 20% we want to sell it to the public, so that when public they buy shares of our company, we will get that amount. Now 20% shares which we want to give it to the public could be lakhs of shares, could be 10 lakh shares, could be 20 lakh shares. All right, now how are these shares divided into, like how many shares we can sell it to the public? This again it depends on the valuation of the company. All right, so okay, so at this stage we want to become public limited. So what, after all the approvals, we will be launching something known as IPO, that is initial public offering. It means first time we are offering our shares to the public, okay. Till that point you cannot go and search in Bombay Stock Exchange or on any of the apps, global trading. If you search, you will not find anything there, okay. So once we launch the IPO and people go ahead and buy our shares, then we become a public limited company. We will be known as a listed company in Bombay Stock Exchange, okay. And after the initial public offering, our company shares will get into the market. Because for example, forget Vikas. You, okay, whatever your name is, John, you have bought the shares of Vikas's company. Vikas means Vikas and the 4 promoters. We have given 20% shares to the public, and you probably bought 1,000 of our shares, 1,000 shares at 100 rupees each. Okay, and you bought it at 100 rupees each at initial public offering, and then after a month, because there's a lot of demand for our shares, our share price shot from 100 to 120 rupees. So within a month you made a profit of 20%. And at that point, you might want to sell your shares. Okay. So how will you sell? This is when it is known as the shares of our company are in the market. Okay. So in the market, anyone can register themselves with, they can open a demat account, okay, trading account, and can go and buy the shares of my company at 120 rupees or whatever the price is at that point. And here we get into more technicality. Okay. Now here, forget about Vikas, forget about Vikas's company. All right. Now look at me as a person who is actually buying shares. So as I mentioned, the first level is where a person can buy shares of a company is initial public offering, IPO. Next is when they get into the market, the open market, that is Bombay Stock Exchange initially. Okay. Then me, for example, I am John, okay, and I want to sell my shares. I sold them at 120. There are other people, okay, Rakesh, Vikram, whoever. What they will do is they'll go and buy my shares from the market, from an app or a website. They'll buy it at probably 120 or 122. So when you buy a share, what you have to understand is that you are actually investing into a company. Okay. Now here you have short-term investment, that is probably 2 days, 4 days, 1 week. You have long-term investment, like people buy into a good company, that they buy shares of good company and hold it for 5 years, 10 years, 20 years. Just like how you hold on to real estate, that is a piece of land. Okay. And then you have day trading. Now day trading is actually the most risky thing, and that is where highest short-term profits are also made. Now day trading means, it's actually kind of hot, so I'm wiping my face. Okay, so now day trading means the market, that is Bombay Stock Exchange, opens at about 9:15 a.m. and runs from Monday to Friday. Okay, so on Monday morning, now me, John, all right, I want to do day trading, that is from 9:15 a.m. I want to buy some shares of some company, and say if I buy shares of Tata Motors at 300 rupees, and in 2-3 hours if the share price goes up by 5 rupees, I sell them immediately. So I make a profit of 5 rupees on every share. So if I have say 1,000 shares, I make 5,000 rupees profit in few hours. So that feels like a lot of money, that feels like a lot of easy money. But the problem is that no ordinary person, like anyone like you and I will not be able to predict if the share value will go up or go down. We cannot do guesswork. The only way we can understand is by doing a lot of research about the company. Like for example, if Tata Motors has launched a new car that day, and there's a huge hype about that car, and the car has been launched at very good price, then most of the time the share prices of the company will go up, because people assume that Tata Motors is going to sell more cars now and they'll make profits. Got it? So that is why the share value will go up. But for example, there's a news that Tata Motors CEO has resigned, something has happened, or the competitor company has launched a very good car which is priced much lesser than Tata Motors, then the shares value can go down because people who already own the shares would want to sell Tata Motors shares and go buy the shares of that other company. And when more people are selling than more people buying, I mean when people are selling and lesser people are buying, the value goes down. And when lesser people are selling and more people are buying, the value goes up. Demand and supply. Alright? So day trading is when someone purchases the share within the trading time of 9:15 a.m. and sells them before 3:30 p.m. That is when the stock market generally closes. But here the problem is, as I already mentioned, you can never ever know if the value will go up or go down. Okay, it is literal, very high risk calculation and almost gambling. Okay, here the bigger risk is you get a margin. Now margin means, now if me, John, okay, has 10,000 rupees in my bank account and I transfer the 10,000 rupees to my Demat account. Now it could be anything, Zerodha, it could be anything, okay, and I transfer 10,000 rupees from my bank account to Demat account. This is the only money that I have. I'm a young guy, I'm 19 years old, okay, man or woman, anyone, okay, and the moment I transfer 10,000 to my Zerodha account or any account, the Demat account also gives you a margin. Now margin means if I have 10,000 rupees, I can actually go ahead and buy shares worth 50,000 rupees in day trading. Got it? So at 9:30 in the morning, I can go and buy shares worth 50,000 rupees, but I actually have only 10,000 rupees cash with me. Okay, it's like using a credit card. Okay, credit card gives you time of 45 days to pay back, but here the margin that you get. Okay, so for example, I went ahead and bought the shares of Tata Motors worth 50,000 rupees, and I probably got, say, a little more than 1,000 shares. Say I got 1,000 shares. Okay, and before the close of the trading session, if I mean, for example, if I bought the share at 500 rupees per share, okay, and if the value has gone up by 1 rupee or 5 rupees, then I sell them. Then I make a profit, a really good profit. But there's a big catch here. That is, if, for example, at 9:30 a.m. I bought shares worth 50,000 rupees using margin when I only have 10,000 with me, but something has gone wrong, the Tata Motors CEO has resigned, something has happened in between at 12 o'clock. It came out in the news and people have started to sell their shares, Tata Motors shares, and all of a sudden, before you could actually sell your shares, the price has dropped by 10%. It can happen. At that point, what can you do? Because you don't have real money with you, by the end of the trading session, that is by 3:30 p.m., you have to sell your shares or automatically they'll be sold. Correct? I mean, you lose them. You don't own them after that. So you'll end up selling your shares at whatever loss it is. It could be 10% loss, it could be 20% loss. But you're still liable to pay back the Demat account. Like for example, I bought shares worth 10,000 rupees and I encountered a loss of 10,000 rupees in that day. So I actually have to pay that money back. That is 50,000 rupees back to the Demat account. Okay. So this is the biggest risk of day trading with margin and not with your own money. Now here, if I would have had my own money of 50,000 rupees, what I would have done is I would have bought the shares in cash and carry, not in margin. So cash and carry means literally buying it, going to a store and buying a bike or a car, you bought it. Okay, so I bought the shares worth 50,000 rupees with my own money. Okay, I bought them at 500 rupees per share, and by 3:15 I realized that the share value has gone down by 20%. Nothing to I mean, of course, you have to worry to some level, but I've not gone into losses because I still have 1000 units of the share. The price of the share has gone down, but I have 1000 units. So here, I will not sell my shares in that day because I already bought them paying real cash. So I will wait. I'll wait for 10 days. I'll wait for 1 month till the share value again comes up of the company, like for example Tata Motors, and then I will sell them. So lesson 1, don't use margin unless and until you're an extremely experienced share trader. Use your real cash. Next, what we have to learn is, no matter how good you are in day trading, when we see the statistics, even the founder of Zerodha also mentioned this, that 90% people, like for example, if they trade for 1 year, day trading, that is buying in the morning and selling in the evening, if they do it, especially using margin, 90% of the people are actually in losses because we cannot predict the value if it will go up or go down. So does it mean that investing in share market is bad? No, it is excellent. So what are the safe ways of investing in the share market? See, this is a very, very big, long topic. I will keep making more episodes about this, but this is understanding of the basics and understanding them in depth. Okay. So the safest way for a youngster to invest in the share market, yes, investment of any kind is great. I personally have wide variety of investments in my life. Real estate, many real estate plots, lands I own, which I bought personally. Okay, I have investments in fixed deposits. I have investments in stock market. I have investments in systematic investment plans. That is also stock market, but you know, in many, many different things. We'll speak about that later. So, safest way for a youngster to invest in the share market. Okay, I mean, this is actually applicable to anyone, any age, but especially a youngster. Okay, so if you have 10,000 rupees or 1 lakh, whatever, when you're 18 to 23 or even 25, the best way to buy is that, for example, right now, Zomato IPO would be coming up very soon. Okay, what you do is you go ahead and buy in the IPO of a very, very reliable, good company. Okay, and then hold the shares, just hold them. You know, an average period that I hold my lands for 10 years, minimum 10 years, and my lands have even gone up by 1000% in the last 10 years. Okay, so you have to hold on to your shares, treat them like real estate investment and hold on for as long as possible. You don't have to sell them till the time you actually need money, or the company is not doing well anymore, or there is a much, much, much better opportunity. All right. So next one, as I said, safe way is investing in the IPO, because that is when the cost of the 1 unit of a share would be at the lowest. The next best and a much safer way to invest in the share market is by investing in systematic investment plans known as SIP. So here, as I mentioned in the beginning itself, that the biggest concern for a youngster in investing in the stock market, in the share market, is because the knowledge of finance and business is very less. Okay, so at this point, you want to invest. Investing is a very good thing, but you would want to depend on someone else's advice. So systematic investment plans are nothing but, for example, you're working, you're getting a salary, or you're doing a small business and you're making some profit monthly. And if you can put aside 5,000 rupees every single month, or even 2,000 rupees every single month, okay, what you can do is you can go to ICICI Demat account or anything. They are, you know, many companies, but very reliable companies, and you choose a systematic investment plan. And at that point, you just have to, like, for example, select one plan. Again, this is a very, very detailed topic, so I'll not get into the depth of this. So you select a systematic investment plan and you dedicate an amount. You say every month I'm putting in 2000 rupees, okay? And you can keep going on, okay? There is no lock-in period that you have to pay for 6 months or have to pay for 1 year. You can, discontinue and sell that systematic investment plan shares anytime. But here, the biggest advantage the youngster gets is that you just invest that amount every single month, and that company like ICICI or any other big company, they select the shares on your behalf. Okay, so you don't have to worry which shares you have to invest in. Every single month they select the best shares and they put your 2000 rupees into it and they buy the shares. Always remember, investments initially look small. You say, what great thing I'm going to do, investing 2000 rupees every single month. But investment is a long and consistent thing that you have to do. In about 5 years, when you look back, it will be a significant amount, especially when correct shares have been selected by these companies like ICICI or any other. I'm not supporting any company here. So systematic investment plan is a very, very good, safe way of investing for a youngster. Next is when you want to select your own shares. Now you say that, no, Vikas, I have some knowledge, okay? Or you say that I have time. Now in SIP, you don't even need to have any time. Every single month, the amount is deducted from your bank, all right? So, but if you have some time to do some basic research, so every single month, the 2000 or 5000, which you decide that you want to invest, you can do it manually. Here, this topic is known as cost averaging. So for example, okay, I have selected to invest in, say, 5 different companies. Every month, 5000 rupees. So here, we have to remember, never invest in the same industry. Like for example, if you are investing in Tata Power, don't go and invest in Adani Power and other power, all of them in the same month, and don't put in all the 5000 rupees of yours. Because there is a saying in financial terms, that is, don't put all your eggs in one basket. Because in case the power industry faces some kind of a downfall, all your shares, the value will go down. So here you have to understand diversification. Diversification means every month choose one company in power, choose one company in food industry, one in tourism industry. Right now tourism is not doing well, but so diversify it like that. Okay. So that way, if one industry is not doing well, your shares in other industry will keep doing well and you'll still be profitable. All right. So why is this method known as cost averaging? Because for example, in January, I invested 1000 rupees into Tata Power and I bought Tata Power at say 150 rupees per one share. And in February, the same share will probably be 160 rupees or 70 rupees. Okay. But in like every month, it will keep increasing a little bit. But when you keep buying every single month, irrespective of the price growing, it means the previous month when you bought, you actually bought at a better price. Correct? So I'll repeat this. In January, you bought at 150. February, you bought at 160. March, okay, you're buying at 170. So you might feel that you're paying more, but the previous months you have to remember you paid less. Okay, so you keep investing like this, and it is known as cost averaging. So these are the methods. Always remember, long term and research and patience. You need to have a lot of patience to invest in the stock market. So should you invest in the stock market? Absolutely yes. Okay. But start slow. Start from 1000 rupees. Start from 5000 rupees. Always remember, any investment that you do, except from fixed deposit, Okay, any investment that you do, you should be prepared to lose that money. Okay, on your mind, be prepared to lose. What I mean is that if I have 1 lakh rupees as emergency funds for my family, now emergency funds mean if I lose my job or something happens, if there's a lockdown, that is the 1 lakh rupees which can take care of a family for 2, 3, 4 months. That money should never be put into any investment apart from a fixed deposit. Okay, so invest small, learn the market. There is no hurry. Okay, don't think that share prices will go up and tomorrow I'll not be able to buy. No, new companies will keep coming up. New companies will move from private limited to public limited. You will keep getting new IPOs. And last thing, when the share market crashes, don't panic. That is the best time to actually buy. This is a different topic. I will discuss about this later on. Okay, so summarizing, yes, start early, but start with very, very small amounts. Okay, and preferably save your pocket money or earn additional income by giving tuitions or working part-time somewhere. I discourage people from demanding money from their parents. It is not a good practice. You will understand this when you become a parent. Okay, and then invest long term. Don't try to become a gambler and day trading at all. Alright, people lose money more often in day trading than they make money. And avoid using margin. Margin is the credit that I mentioned. That is when you have 10,000, you can still buy shares worth 50,000 rupees. So I spoke a lot. This video is, I don't know, probably more than 30 minutes long. So I might have missed out a few points, and whenever I remember them, I'll make a dedicated topic about them. And you guys can request about dedicated topics. And I will also speak about my personal investments, what I've learned out of them sometime in some dedicated videos. So take care, friends. Remember, when you're young, invest. A fancy lifestyle is not what you should have when you're very young. Okay, live well, take care of yourself, but you have nothing to show off to anyone. You're 18, 20, 25, 30, or even 35. You have nothing to show off to anyone. Okay, when you're very young and you're going in a Mercedes Benz, if you're 25, 26, you're going in a Mercedes Benz, even if you bought it with your own money, no one is going to respect you very highly, because very often they're going to think that this car belongs to the father or the mother. No one will respect you very highly because you're driving in a very expensive car. Anyone can live decently well till the age of about 45, but after 45 you should be at a level where you no longer work for money and the money that you earned actually works for you. It's a different topic again. So thank you guys. I've been making motorcycle related videos for many years, but I realized that if I don't make financial videos, then silly motor vloggers who only tempt the youngsters by showing a fancy lifestyle. So this way, the youngsters of today's world will not understand finance in a traditional manner, and they will face a tough time when they become about 35 or 40 years old. So that is the reason I'm making these videos. So if you're new to this channel, you can subscribe and you can be in touch with me in comments. I'm there on Instagram also, RVK Vikas. It's in the description. Thank you, buddies. Bye-bye.